Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the whole wide world you are tuning in from. Well, I'm so excited as always to welcome you all to yet another promising edition on the Forex Morning Mastery, your daily dose of financial insights and trading strategies. I missed you guys. I do hope you're still on top of the game as we continue to navigate through the current market structure, especially as we anticipate the most important event for this week, which is the Fed's interest rate decision, FOMC announcement, and of course the Fed chair, who is going to be having a speech later today. And of course, we know how important this is as the Feds are trying to have a timeline as regards to the easing cycle for their monetary policy. And today being the third trading day of the week, the midweek, we are going to be reviewing how well the assets we have been monitoring since the beginning of the week have been doing. And of course, use the historical data we can have on the chart to strategically position ourselves for the next move. I got a couple of messages on my personal correspondence as regards to why I did not come on live yesterday. Well, I did emphasize in my video on Monday that the Forex Morning Mastery will only be coming up 3 times in a week: Mondays, Wednesdays, where we'll do a review, and Fridays when we close for the week. So going forward, we are only going to be witnessing the Forex Morning Mastery 3 times in the week. However, that doesn't stop my usual daily commentaries. Every time I see new opportunities or as at when due, I will always give you updates on both my TradingView and Telegram platform. So I'm excited to have you guys join me today as we navigate through the current market structure. In fact, it is expected. Remember, we have been monitoring 3 financial assets since the beginning of the week, which includes the USOILSPOT, the GBPUSD, and the XAUUSD. Though we've done very well on the USOILSPOT as we rode the momentum since the week began, having about 3-4 buy positions before we were taken out this morning with over 200 pips in profit. Except for this, the other assets have been struggling to gain traction, and of course we know why this is happening. The anticipation of the key event for this week is not allowing major key players to make a decision yet. So most of them are stepping aside, waiting for the outcome of this event before making any aggressive and directional bet on this asset. So this is why we have seen this extended sideways trading activity, and we did hint ourselves on Monday that we should expect such, and we should ensure that whatever position we have, if it moves reasonably well in our direction, we move our stop losses, secure this position, has the tendency for price to snap back into the entry point is very high during this phase. So far this week we have done pretty well, if you would ask me. And today we are going to be, in fact, I have very interesting setups, simple, interesting setups that we will be using to navigate the current market dynamics today. And for those of you who are with me on both my TradingView and Telegram platform, you definitely must have gotten an update as regards to that. But we are going to be reviewing, expatiating on that this morning. And for those of you who are joining us for the first time, you are highly welcome on board. Very excited to have you around with us this morning. And I know you will be wondering what this is all about. What is it that we do here on the Forex Morning Mastery? Well, to start with, we usually share a couple of videos during the course of the weekend, which entails the plans for the new week. So the Forex Morning Mastery is an avenue where we come together as technical traders to review and do follow-up details on all of these assets. So it comes up now Mondays, Wednesdays, and Fridays. And my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works, and eventually be able to use that information you gather here to enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. And please do not forget to support the project by giving the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the YouTube algorithm to promote the video to a wider audience of traders who may find this content beneficial. Thank you very much, guys, as you do so. So with that being said, here we shall be diving right into the business for today. And of course, and as usual, the first thing we normally do, before I do so, I see a couple of comments here. I can see you, Sahid Nasir. Good morning to you. Yes, and sincerely, I miss you too. I'm glad to have you back with us today. And like I said earlier, we are only going to be doing the Forex Morning Mastery 3 times in a week going forward. All right. And I see you, Sam. I see your comment, Sam, but I'm not sure I get to understand what you really mean. You said great content as much as it is to find a GD balance in your pace and timing of the markets, the news and commentary on notable event reaches and measures up to some expected anticipated moves. Well, I would probably I will take that as a compliment. Thank you very much, but I'm still not getting the gist behind the phrase. If you don't mind, you might want to do a rephrase so that we can all be on the same page on that one. Thank you very much, Sam. All right, so in the absence of no questions, let's move right into the economic calendar so that we can keep tabs with the fundamental factors that are likely going to be influencing the market sentiment for today. And you know how important this exercise is, as we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, most importantly, timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we have been monitoring since the beginning of the week, we have been focusing on high impactful economic features from both the United States and the United Kingdom. However, for the first half of the week, there has been no high impactful event, so we included the mid-tier economic features to understand what market participants will be looking at to gauge their trading decisions. And for yesterday, Tuesday, March 19th, we had the housing starts and the building permit, which obviously gave us an insight into the health of the housing sector in the United States. And we do know how sensitive the housing sector is to the US economy, and from the data we are able to come up with, it shows that there is an expansion, as we saw a 1.521 million and 1.518 million respectively, beating all market expectations in that regard, and of course also more than the previous month. So it's been a healthy sector so far based on the report we are having now, and this obviously should favor the US dollar positively. However, today, Wednesday, March 20th, we have a bunch of high impactful events. We have a lot of them today from both the economies. And for the United Kingdom, we already witnessed it this morning, about 2 to 3 hours ago, where we saw the consumer price index. For those of us who do not know, the consumer price index is considered to be a inflationary gauge data, which of course gives us an insight into the inflationary status of the United Kingdom, or whatever economy it is coming out from. And the policymakers usually look at this data to guide what their monetary policy report is going to be like, or what their easing cycle is going to be like. And in an era where the sentiment in the market is suggesting that the Bank of England is likely going to be keeping interest rate higher for an extended period of time, the consumer price index actually came in below expectations at 3.4% as against the expected 3.6%. And what does this simply mean? Technically, it tells us that inflation is gradually reducing in the United Kingdom, which is obviously a good signal. And in that light, we may begin to see the possibilities of a rate cut due to this. But based on what the Bank of England governor said yesterday after the meeting, he did emphasize that interest rate will be left higher for an extended period of time, as they hope that the inflation target will be met gradually. So the inflation target is at 2%. So currently we have 3.6%. So it shows signs that things are doing better, but it is not likely that there will be an interest rate cut. Remember, the Bank of England is going to be doing their interest rate decision tomorrow, announcing it tomorrow, and the sentiment in the market is projecting a leaving the interest rate unchanged. Then we also had a core consumer price index, which also came in below expectation. It's another inflationary gauge too as well. Then which other one do we have here again? Okay, consumer price index and the core consumer price index, all of which came in below expectation. Then the producer price index did very well. We saw an expansion in that regard, which gives us a mixed data from the United Kingdom. So we are going to be looking at the GBPUSD chart to see how the market had reacted to this event and how we can strategically position ourselves for the next move. Then later on today, hold on a second, trying to okay, so later on today we will be tuning to the US economic features, and the first event from the United States will not be coming until about 10 hours from now, so we need to mark the timing of this event. And in fact, they will be coming in simultaneously, and it is very likely, there is a high chance that we will be seeing some level of volatility in the market today, and obviously we do want to be on standby to capitalize on that opportunity. So we are having the first event from the United States today, which is going to be the monetary policy report, which is considered to be a comprehensive assessment provided by the Federal Reserve, detailing the economic outlook and the rationale behind monetary policy decisions they will be making today. Then we're also going to be seeing the FOMC economic projections. So they will be doing some projections as regards to interest rates and monetary policy outlook, and of course the economic outlook as well. And one of the most important one today is the Fed's interest rate decision, which will be the outcome of the Federal Reserve's meeting, where they decide whether to change or maintain the current interest rate. So this decision here is going to be making a significant impact on market sentiment, as it will be reflecting the Fed's assessment of the economic conditions. And the expectation at the moment is that the Feds are likely going to be leaving interest rate unchanged, and there is this idea that interest rate cuts will start in the month of June, during the June policy meeting. So we are going to be having an insight today, especially when the Fed chairman is going to be speaking much more later today, I think after 30 minutes after the event. So he will be communicating the central bank's monetary policy decisions, economic outlook, and of course he will be answering questions from the media, and whatever he says will be what market participants will be using to gain insight into future interest rate changes and overall economic conditions. So these are events that we are going to be looking out for today, and they will be playing a major role in influencing the market sentiment. And I know some of us will be asking, okay, if interest rate is left unchanged, what is likely going to be happening? I think the dollar will continue to rise if interest rate is left unchanged. And if there is a cut in interest rate, then we might likely see a fall of the US dollar. But we still need to see how the market will anticipate this event. And of course, we do know that the anticipation of this event alone has a way of influencing the way market participants will be behaving today, which obviously will reflect on the chart as price action. So what we are going to be doing today, as always, is to sniff through the current market dynamics on the charts, looking out for structures and patterns that we will be using to guide our decisions today. So I encourage us all to stay tuned in so we don't miss out on any of the ideas we will be deliberating on today. I see you, Made on Hearth. Good morning to you. Glad to have you around with us this morning. Trust you are doing very well out there. So as always, the first asset we are going to be taking on today is going to be the USOILSPOT. And so far this week, we've done pretty well on this particular asset as we rode the momentum since the breakout retest of that $81 level, which we identified at the beginning of the week. And following this, we've had multiple entries, added more positions along the line to maximize the potential of this bullish move. And for the sake of those who missed out on our earlier session, let's run through what really happened at the beginning of the week and led to the decisions we made. And for those of you who missed out on my top-down analysis on this asset, I encourage you to watch my Monday video on the USOILSPOT, where we did a top-down analysis, and in fact it will also help you to have a background knowledge of how we got to this point, how we were able to identify the key levels, the trend lines, and the structures we said we will be using to guide our decisions for the week. The links are right in the description box of this current video you are watching, so you can check it out after the live session. So at the beginning of the week, the first thing we observed was how price action started the week on a strong bullish note, and this led into a situation where price was confined within the $81 area and the $80.50 level, and we had a range bound structure identified at the beginning of the week. And you know how we do it whenever we have this kind of structure. We do want to wait for the market to make a decision as we wait for either the breakout of the resistant line of the range to give us an opportunity to buy, or the breakdown of the range to give us an opportunity to sell. Now, in addition to the range bound structure we had here, remember that we also had this ascending trend line marked out on this chart. Now, if I zoom out, you will see that since last week Friday, we saw, is it last week Friday? I think, yes, we had this ascending trend line marked out. And we saw here that since price climbed above this ascending trend line last week Wednesday, price had continued to maintain trading activity above the ascending trend line. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we will continue to look out for patterns and structures that supports the idea of buying that asset. So with this information in mind, coupled with that range bound structure, we were positioning ourselves for buying opportunities at the breakout and retest of the $81 level. Now, as at the beginning of last week, we already have a buy position triggered, and I did emphasize on Monday that for those of us who had missed out on that opportunity, let's see if the market will come back, retest the structure in an attempt to continue the uptrend, which was exactly what happened. And I do hope you all capitalize on this opportunity. And I can also remember giving us updates as along the line as we had multiple levels like the $81.50 area. We also added one more at the $82.25 level, and finally we added another one at the $82.80 area, during yesterday's trading session. So we had a 4 position triggered. 3 of the position did very well, while the 4th one did not do well at all, as we got taken out on that one in a loss. So at the end of the day, we were able to make over 200 pips in profit on this asset for this week, which is not bad for the first half of the week. So well done, and kudos to everyone who capitalize on this opportunity. So as it is right now, you shouldn't be in any position on the US Oil Spot right now. Now, looking at the structure here, it's important that we also take into consideration the fundamentals behind the scenes, which obviously has been affecting the ascent of price. Well, we have the geopolitical tensions in the Middle East, of course, which obviously incites the appeal for commodity assets such as this, and also the concerns regarding the disruption of oil supply from the Middle East. And lately we had news from the Russian-Ukraine war, where the Ukrainian military did airstrikes on Russian oil refineries. So at the moment, as at what I was hearing this morning, the Ukrainian has hit about 10% of the Russian refineries in the Russian land space, which obviously is going to be affecting the supply of oil from that area. And when supply is affected, when supply reduces, we know what happens: demand will rise, and when demand rises, price of that asset or commodity is going to soar. Now, this obviously has been part of one of the reasons why price of oil has been rising. Then yesterday we also had the report from the American Petroleum Institute for last week's crude oil stock, which showed a decline of 1.519 million barrels, contrasting with the anticipated increase of 0.077 million barrels. Now, this for me is a signal that supply is high, and in fact, if we want to take a simple understanding into what this means, it shows that there is less oil available compared to what was expected, which could potentially lead to a decrease in the supply of oil. Now, when the supply of oil decreases, it often leads to an increase in the price of oil because there is less of it available for buyers. Now, this can happen because when there is less supply, buyers might be willing to pay more to secure the oil they need, which will definitely drive the price of oil to the upside. So in simple terms, this report suggests that with less oil available than expected, the price of oil might continue to rise today. Now, looking at all of these fundamentals, it is quite clear that the path of least resistance for US oil is to the upside. However, we're still looking forward to the EIA report, which is coming up later today, which obviously will be giving some fresh impetus into this market. And of course, the FOMC announcement will have an influence on the price of oil. Now, we know how the US oil is a US dollar denominated asset, so whatever happens to the US dollar will affect the oil at this point. Then another thing that could also we should also take into consideration is the if the US dollar rises today, if the US dollar rises due to the interest rate remain unchanged, the US oil might become very expensive for other currencies to buy, because when the dollar rises as a result of interest rate kept higher, we may likely see a less demand in oil. It's a possibility, but let's see how the market is going to be reacting to this event. So looking at the structure from a technical standpoint, you can see that price is still trading above the ascending trend line, which obviously still opens up the idea for more opportunities to buy here. And as at this morning, I had to add another ascending trend line. As you will see, this is the major trend line we identified at the beginning of the week, remember. Now, in the last 48 hours, we saw an inclination, a new inclination to that trend line, giving us a new one right here, which appears to have been broken, but we can't say it has been broken yet because the current candle running around this trend line right here still has about 17 minutes for it to close. So we never can tell. It could still turn out to be a hammer candle, which technically presents buying opportunities for us. So we want to see how the market is going to be reacting to this trend line, which beautifully shares a confluence with the $82.25 level. So this confluence here, we want to see how price is going to be reacting to the structure before making any investment decisions. Now, looking at the structure here, there are three possibilities that could happen here. Is it three? I think yes, three or two. Let's look at it together. So if price action breaks down this area, it doesn't necessarily mean that we are going bearish with this scenario here. Remember, we still have that ascending trend line below it, so it could come like this, come back into the trend line where the appearance of a reversal pattern emerges. Then we want to be buying the breakout retest of that reversal pattern, of the neckline of that reversal pattern, to continue the uptrend move. And if price goes on to break out of the $82.80 level, we definitely want to be adding more buy positions to our existing trade. So we are not panicking with this current sell position that we are seeing right now. I want to consider it to be some profit-taking activities going on right now as market participant takes a cautious stance ahead of the Federal Reserve announcement later today before making the next move. So I still think market participants are taking some profit. Those who had capitalized on that uptrend move since the beginning of the week are doing some profit taking, which is obviously reflecting on the chart as a retracement move of that impulse leg. So how far will it go is what we are looking at right now. So let's see if this trend lines here will be a barrier to stop the descent and then give us a privilege of joining an uptrend continuation. So what we are looking out for here is a form of reversal pattern. It may come in the form of a double bottom structure, a head and shoulder pattern, or a falling wedge. Whichever case it may be, we mark out the neckline and then buy the breakout of the neckline. But trust me, I will be giving you up on both my TradingView and Telegram platform as soon as a new setup comes up. However, if it so happens today that price action breaks down this major ascending trend line here, then at this point we may start considering selling this asset. But I would like to see a confirmation happen, like a retest of the trend line, before I can start considering selling this asset. And then if that happens, then we have the $81.50 level, the $81 area, to add more sell positions to our existing trade. So we will be seeing how the market will react to the $80 level, which happens to be our key level for this week. So we are looking at a minimum of 180 pips to catch here if it so happens that price drops to the downside. So we shall be on standby to capitalize on any of the opportunities the market presents at this point. So we are at a crucial juncture as market participants anticipate the FOMC announcement today. So let's exercise patience. This whole structure can take about 3-4 hours before it matures. So let's exercise a lot of patience. And if there is anything new that comes up, trust me, I will definitely give you update on both my TradingView and Telegram platform. So this is my simple view on the USOILSPOT for today. I hope I made myself clear. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. And please, let's make the likes tally with the number of people on board. So we have over 8 people on board right now. Let's click on that like button if you have found this content useful in making your independent trading decisions for today. And thank you very much as you do so. See you soon. All right, so I see you, Jonah Aruna. Good morning to you. Glad to have you around. Torres Master, how are you doing today? Good morning. It's been a long time. Trust you are doing very well. And how are you doing so far? Thank you very much for checking in on us this morning. I see you, Made on Hearth says that the $81.80 area, is that not an area to buy from? Well, it could be. And like I said earlier, we don't want to be rigid in our approach. We don't want to be rigid. We don't want to be dogmatic. We want to be very flexible in our approach, and that is why we are also taking the fundamental factors into play here. Now, if we consider the fundamental factors, the path of least resistance for the US oil is to the upside. However, considering the fact that we are looking forward to some high impactful event today, which obviously has a way of influencing the behavioral patterns of market participants in this environment, it is very important for us to exercise patience and wait for some structures to mature before jumping into any position. Though you're quite correct, we have an area there where we want to be buying around that area. But for me, I would like us to exercise patience. It is very likely we could see a situation where this ascending trend line is broken to the downside, and if you already joined that move, how will you feel getting into a loss and then price continues to drop to the downside? So it doesn't make any sense. So what I'm simply saying here is that we still within a bias territory at this point in time, so we want to be looking out for reversal patterns before jumping into any position. And this reversal pattern can come in the form of a double bottom structure around this area, a head and shoulder pattern, or a falling wedge, whichever case it may be. Then we mark out a neckline from that reversal pattern, which obviously we want to see broken to validate the reversal pattern, and then we can join the uptrend move. So that is how we are going to be capitalizing on the uptrend continuation from here. And if it does not happen, and instead price action just continues to rise to the upside, we already have a buy stop order above the $82.80 level to maximize the uptrend continuation. So like I said, this is how we are going to be managing our bullish expectations on this particular asset. So I hope I answered your question there, Made on Hearth. If you still have any further questions, feel free to let me know in the comment section. So in the absence of no question at this point in time, I hope you guys have clicked on the like button. Let me see how many likes we have here. So we have 5 likes and we have 8 people on board. So we still have 3 people on board who are still not liking this project. The like button is right below your screen, the screen you are watching right now. Just click on it, please, and support this community as you do so. And thank you very much, guys. So with that being said, here we shall be going on into the next asset on our watch list for today. So the next asset we are going to be looking at this morning is going to be the GBPUSD, and on the GBPUSD we've done fairly well. Let me say, I don't want to be too cocky about it. We've done fairly well this week on the GBPUSD, though we had a loss at the beginning of the week. Remember, we initially bought the range bound structure which we identified, but unfortunately that position did not do well for us as it went to hit our stop loss, and then we had the privilege of selling during the first day, and then yesterday we saw another sell position triggered, which all came in alignment with the structures we identified here yesterday. So let's run through what really happened at the beginning of the week that led to the decisions we made. So at the beginning of the week, price action was more or less trading above the ascending trend line we identified on the 4 hours time frame. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we obviously want to be looking out for patterns and structures that supports the idea of buying. So this was the ascending trend line we identified on the 4 hours time frame, and as you will see, at the beginning of the week, price was trading above that structure. And remember what I said on Monday, after considering the fundamental factors, I did mention that the path of least resistance for the pound sterling against the US dollar is to the downside. Everything was screaming bearish for the GBPUSD at the beginning of the week, but when the structure was supporting an ascent, we had no choice than to listen to it, because the structures we identify on the chart is what serves as our guiding light for any trading session. So we were looking out for buying opportunities at the beginning of the week. After citing the structure, the price was trading above the ascending trend line, and in addition to the ascending trend line, we saw a range bound structure where price action was confined within the 1.27390 level and the 1.27250 area to emphasize the prevailing uncertainty in the market at that point in time. And usually when we have this kind of indecision going on, we exercise patience waiting for the market to make a decision, which obviously will come in the form of either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And with the situation we had, we saw price break out of the resistance line a couple of times on Monday, and we had a buy position triggered. As you will see here, that the position did not do very well at all, as we saw price move about 8 pips, 9 pips thereabout before the bearish momentum came in, taking us out of that position in a loss. Then remember, we also emphasized that this ascending trend line, if in any way it gets breached and broken to the downside, we shall be preparing for selling opportunity. So we saw the breakdown of that structure, and I did give us an update on Monday, as we will be having a sell stop order below the structure. And obviously we saw price break down the structure, and price moves significantly in our favor, as we saw about, how many pips was that? We saw about 60 pips move in price movement. And I did remember informing us to move all our stop losses to secure the current sell position. If you had done so, you must have been taken out with some reasonable size of profit. For me, it was about 40 pips I was able to take on that one, and the worst case scenario for you is break even if you had moved your stop loss to your entry point. Then during yesterday's trading session, I wasn't able to update my exclusive price action tutorial before the New York session yesterday. In this part of the world, we are having some internet related issues as regards to the damage to the internet optic cable under the sea last week. So this has really affected most of the ISPs in this part of the world. So I've been switching between ISPs. I run 3 ISPs, and I've been switching between them depending on the time zone. So due to this time, I couldn't be able to upload that video, and in fact this was one of the reasons I was not able to broadcast the XAUUSD live window yesterday. But I did give us an update yesterday as regards to the current structure, where I identified a sell window right between the 1.273 and the 1.27155 area, as you will see right here, where I did told us in my commentary that it also shares a confluence with this descending trend lines we identified yesterday. So with this descending trend line here, you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we obviously want to be looking out for patterns and structures that supports the idea of selling. Now, I told us yesterday that if price comes into the sell window, we want to see a reversal pattern to join a bearish move. For those of you who are with me on both my TradingView and Telegram platform, you must have gotten this update. And if you did so, I hope you capitalize on that opportunity, as we saw continued selling pressure around the 1.27250 area to inside that's this new sell positions we have currently running right now. And in fact, we have it running with about 23 pips in profit at this point. So we want to be seeing how far this bearish momentum is going to be going. And for me, I will say that the little bit of consolidation phase we saw around the sell window could be attributed to the cautious sentiment prevailing in the market right now, especially ahead of the Federal Reserve interest rate decision, which is coming up later today. And of course, this morning we saw the report from the United Kingdom, which revealed the annual CPI inflation decreasing. Of course, we talked about this earlier, and this report will influence the Bank of England's interest rate decision, which is coming up tomorrow. So, but there is this general belief that interest rate will be kept higher for an extended period of time, but I still do not see any sign that this will favor the pound sterling in any way, especially in an era where the US Treasury bond yield is doing very well, and we know how directly proportional in value the US Treasury bond yield is to the US dollar. So if the US Treasury bond yield is doing very well, we expect the dollar to do very well, and this may really rub off on the pound sterling. However, this morning, we had the Bank of Governors stating that while there have been positive developments regarding inflation in recent months, policymakers will still require further evidence that inflation is moving towards their 2% target. So, before considering any interest rate cut. So, considering this development, I still have a strong belief that the path of least resistance is still to the downside on the GBPUSD. So in that regard, I'm going to be maintaining a bearish bias for today's trading session, and of course looking out for more selling opportunities at the breakdown of the 1.26750 area to maximize the potential of this bearish move. Now, the only condition that will make us buy the GBPUSD today is for these descending trend lines to be broken to the upside. Now, look at this trend lines here I just showed you earlier. As you will see, this trend line here has been supporting the bearish momentum in this market since last week, Thursday. And you know how we use our trend lines in this community. As long as price remains below it, we will maintain a bearish bias and continue to look out for patterns and structures that supports the idea of selling. Now, if I am going to be buying the GBPUSD today, the only condition I want to see on this chart is for that descending trend line to be breached and broken to the upside. So the only condition here is for me to see price break out of that structure, and in fact I would like to see some retest of structure for confirmation's sake before continuing the uptrend to the upside. And if price goes ahead to break out levels such as the 1.2739, which happens to be the highest area for this week, we will be adding more buy position, and a further breakout of our key level at the 1.27600 area will be welcoming more buy positions for us. So that is the only condition for me today that will make me buy the GBPUSD today. So you can see how crucial that descending trend line is in guiding our trading decisions for today. So you do want to be marking out these trend lines on your chart, as you will be using them as a reference point to guide your independent trading decisions for today. So let's see how far this bearish momentum will go. I have a strong feeling that we are going to be seeing a strong volatile move in price movement today. So we do want to be on standby to capitalize on these opportunities. So this is my simple view on the GBPUSD today. I encourage us all to mark out these levels on our chart, as we will be needing them to guide our decisions. And if you have any questions whatsoever as regards to what I have said so far, or you need some further clarifications, feel free to let me know in the comment section. Trust me, I'm here and willing to be of help in that regard. If you can also take that time to mark out these levels on your chart as we continue to monitor price action. So I see your comment, Wesley Jasenga. Good morning to you. How are you doing today? Glad to have you around with us this morning. And I can see your comments, Sahid Nasir. And let me see if I can read what you said here. If I need to enter in now, shall I enter now or wait for a retest? I guess you're talking about the GBPUSD, right? I guess you're talking about the GBPUSD. We've already entered the GBPUSD, unfortunately for you. We've already entered the GBPUSD right now, and we've already seen the retest of structure actually. See what happened here. We saw this impulsive move to the downside here yesterday. And then we saw price come back to retest. This is the retest of structure already. So we already have a retest of structure happen, and in fact we have a reversal pattern in play to push price to the downside right now. So if you would ask me, thank you for even bringing up that question, because it further gave me some insight into this current structure. Now looking at the structure now, you will see that the retest of that sell window actually evolved into a reversal pattern in the form of a double top structure. And usually when we have this kind of structure mature, we want to be marking out the neckline, which obviously lines up with the 1.27165 area, like this area right here. So let's label this area 1.27165 level, right? Okay, so we have this level in place. Now this level here is serving as the neckline of that reversal pattern that formed within that sell window we identified. So, and as it is right now, price action has broken down the neckline, and in fact we've had a retest of that structure happen there. Now if let's see if the market will give us some second chance to have a retest. So price coming back to retest the 1.27165, which beautifully shares a confluence with this descending trend line we marked out here, could welcome more selling opportunities. So you are right, Sahid, a retest of structure here, and if price comes into that structure, please scale down to the 15 minutes time frame. You look out for selling pressure, maybe 2 candles or so, then you can join the bearish move to the downside. So it's okay, you're making a lot of sense there, Sahid. Thank you very much for that insight there. So we're looking out for selling the retest of the structure right here. So let me just put the arrow there too as well, so that we can use it as a yardstick to guide today's decision. So all right, thank you very much, Sahid. I hope I answered your question there. Okay, so in the absence of no questions, I guess we are all on the same page here, and in that regard we shall be moving on to the final asset on our watch list. And for those who had clicked on the like button, you guys are wonderful. Thank you very much. And right now we're having over 11 people on board right now. Let's make the like tally with the number of people on board. So we have 2 people left on board who are yet to click on that like button. So I really want to see you click on that like button. And let me tell you, if you don't know, by clicking on the like button, you are actually supporting this community and this content to grow. By clicking the like button, it helps the algorithm push the video to a wider audience of traders who may find the content beneficial. For those who are like, thank you very much. For those who are yet to like, please click on that like button, and thank you very much as you do so. Okay, you are welcome, Sahid. So I think in the absence of no further questions, let's move on to the next asset on our watch list. So the final asset on our watch list for today is my favorite asset, of course, and that is the XAUUSD, popularly known as the gold spot. And what an interesting situation we have on this asset since the beginning of the week. The market has been very choppy, as you will see. Price has been range bound for over 50 hours now, and we all understand why this is happening. The anticipation of the FOMC announcement coming up today is one of the major reasons that has given us this kind of structure we are seeing on the chart, as major key players appear to have stepped aside from the market, waiting for these data to come in before making any aggressive and directional bets today. And I did emphasize this on Monday too as well, that we will be taking note of these possibilities that is likely going to be happening ahead of the event we are looking forward to. Now, yesterday I did give us an update yesterday morning where I was looking at selling, as we saw how buyers have been finding it difficult to break out of the $2,162 area since the week began, and this inability of buyers to break through this area is, for me, a red signal that we might be seeing price action drop to the downside. And for those of you who watched my weekend video on the XAUUSD, remember that we saw a structure on the 4 hours time frame after that very strong impulsive move that hit the all-time high at the 2,195 area. And following every impulse leg, there is always a phase in the market where we begin to see some choppy market condition happen, which could evolve into the beginning of some profit-taking activities, which would reflect on the chart as a retracement move. And for the sake of clarity here, I would like to share with you the 4 hours time frame which we saw at the beginning of the week, so that we can all be on the same page here. Now look at the structure here on the 4 hours time frame, and after considering the character of price action in the last 6 to 7 weeks, you'll see that the market has been very bullish, as you will see here. So we saw this uptrend situation where price action went to hit that all-time high at the 2,195 area. And we do know that there is this psychological peculiarity when price comes into an all-time high. It takes some time for price to acclimatize to that zone before it continues the uptrend. And this is usually due to the fear that price may crash from that area. So market participants who had capitalized on that bullish move may want to start taking some profit off the chart, and this usually reflects on the chart as a retracement move, consolidation phases, or even choppy market conditions. And if you look at what happened since price tested that all-time high, you'll see that market has been going through a consolidation phase, which has evolved into a structure which could be considered to be an uptrend continuation pattern. And despite the fact that we have an uptrend continuation pattern here, I still hold on to the belief that we may likely see this whole structure transition into a reversal pattern as well. And during my weekend video when I was analyzing the XAUUSD, I did emphasize that the only condition that will make us buy this asset is for price to break out of the resistance line of that pattern to continue the uptrend move, which is yet to happen. And in fact, that level shares a beautiful confluence with that 2,162 level, which I showed you on the 1 hour time frame, which I've been serving as a barrier for buyers since the beginning of this week. So this level is yet to be broken to the upside. So we are yet to see a signal that suggests that price is likely going upward. However, if we consider the fundamentals in this market, I told you about the expectations in the market right now, where the sentiment is suggesting a confidence that the Federal Reserve will maintain its stance of keeping interest rate higher for an extended period of time due to the persistent inflationary pressure in the United States. Now, this is an hawkish outlook, which of course is going to be keeping the US Treasury bond yield at a very good good level at this point in time, and you know how the US Treasury bond yield is directly proportional in value to the US dollar. So if the US Treasury bond yield is doing very well, the dollar is expected to do very well too as well. So the path of least resistance for gold for this week, I told you in my weekend video, is looking to the downside, and coupled with the fact that we are within an area, an all-time high zone, which usually incites some retracement move, I'm leaning towards price action dropping to the downside. And how far will this bearish momentum go? And if you watch my video, we were looking at between 800 pips to 1,000 pips to catch here if price action drops further to the downside. And to guide our decisions for this week, we have our key level, which is situated at the 2,155 level, as you will see right here, where the breakdown of the structure will be inciting some bearish ideas for us. And look at how the week has started. Since the week began, we have seen price break down that level a couple of times, which is giving me a signal that sellers have building momentum in anticipation of doing a further breakdown of the structure. But the breakdown can still not happen yet, as market participants are being cautious, waiting for the FOMC announcement to happen before pushing in their positions. So the path of least resistance is looking bearish. Everyone is expecting that the Federal Reserve will keep interest rate unchanged, and if this happens, I still think price will continue to the downside. And the reason why we have our TP target around the 2090 and the 2065, first of all, we have a structure here which I did highlighted in my weekend video, as you will see here, and then we have another structure at the 2065, which interestingly shares a confluence with that ascending trend line, which has been supporting this bullish momentum in the last 4 to 5 months. Remember, this is our ascending trend line here, and price may likely retrace back into the structure in an attempt to continue the uptrend move. So things are looking very, very bearish for me today. That is what my instinct is telling me, but we need to follow what the market will say. So that is why we would like to go back to the 1 hour time frame, look at the structures, and see how we intend to strategically position ourselves for the next move. So I hope with what I shared with you here on the 4 hours time frame, you get to understand the psychology behind the decisions we are going to be making on the 1 hour time frame. So scaling back down into the 1 hour time frame right now, let's zoom into the current structure. So since yesterday we had a sell position triggered at the breakdown of the 2155 level, and in fact in the last 24 hours the proposed bearish momentum is struggling to gain traction as we witness extended sideways consolidation at this point in time, though price is back into positive territories right now, as we have this current sell position running with about how many pips now? Just about 7 pips in profit at this point in time. So let's hope that this momentum will continue to the downside, and if it does, we do want to be adding more sell position at the breakdown of the support line of this week, which is the 2156 level. This is the lowest point price action has been for this week. And if price continues to drop to the downside, we will be adding more at the breakdown of the 2142 level to maximize the potential of this bearish move. So the path of resistance for me is still to the downside. Let's hope that this will continue. But if it doesn't, and instead the market surprises us today and goes to the upside, what are the conditions that will make us feel comfortable buying this asset? Well, like I said earlier, I would like to see price take out the highest point for this week, which is at the 2162 level, which shares a confluence with the resistant line of that uptrend continuation pattern we identified on the higher time frame a couple of minutes ago. Now, if price can break out of that structure, which beautifully shares a confluence with that resistant line of that pattern we identified on the higher time frame, then we are good to buy this asset, and we can be looking out for more opportunities to buy had the breakout of the 2167 level. So we are at a very crucial juncture in this market. The market is still experiencing a consolidation phase, which further emphasizes the prevailing uncertainty in the market, and we understand why this is happening, as there is an indecision as market participants opt to wait for the FOMC announcement before making any informed decisions. Then we also understand that the geopolitical tensions in the Middle East, that is the Russian-Ukraine war, and of course the tension in the Middle East will likely provide support for the gold. So if the escalation continues today, if we see some new escalations today, we may likely see price breakout of the resistance line of that pattern to continue the uptrend. So at this point, let's remain cautious. We have a sell position still running. Let's see if it's going to run successful or it's going to be taken out in a loss to trigger a buy position. Well, let's be prepared for any opportunity the market presents to us today. So this is my simple view on the XAUUSD today, and hopefully if the internet reception is quite okay during the New York session, I will be broadcasting the XAUUSD live window, where we shall be coming here to monitor real-time price action on the XAUUSD. You will be seeing the link at the end of the video. Once the video ends, you will see the link. Click on the link, click on the notify me button so you can get notified as soon as we come on live. It usually kickstarts about 5 to 10 minutes into the New York session and lasts for about 5 to 7 hours depending on the volatility in the market. So I'm just hopeful that the internet reception will be good today, so we can run the live stream so that we can prepare ourselves for the FOMC announcement. So I think I'm done with the XAUUSD for today. I don't know if you have any questions. I hope I made myself clear, but if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 5-10 seconds off to see if there are any questions before we start rounding off on today's Forex Morning Mastery session. See you on the other side. So I see your comment here, Saeed. Okay, you are welcome. And then you said here, if the Fed chair gives a hint to rate cut in future, then gold will go down or not. Okay, we need to understand something about the dynamics regarding interest rate decisions, cuts or a rate cut or a rate hike. Now, what's the importance of interest rates? Okay, so we need to understand that interest rate is a mechanism used by the central bank of any economy to balance the liquidity in the economy, to maintain inflation in the economy. And when there is high inflation, the next thing the central bank wants to be doing is to increase interest rates. Now, when you increase interest rates of a particular asset, what this simply means is that that asset becomes very attractive for investors to come and put their funds in because of the differential value in the return on investment. So for instance, if you are doing, let's say, look at the USD JPY, for instance, the Japanese yen has an interest rate of minus 0.1%. That means if you're holding the yen, you are not earning anything on the yen. Now compare the yen to the US dollar, which is currently doing 5.5 interest rate. So if you have a yen, you definitely want to put you definitely want to go and buy the US dollar because of the high interest rate. So you're going to be making 5.5% if you invest your money in the US dollar. So are you getting the dynamics behind this? So if interest rate is high, the demand for the US dollar will increase, which obviously will result in scarcity, and the rise in the US dollar will continue to soar to the upside. So if the Fed keeps interest rate higher for an extended period of time, this means that investors will be willing to put more funds in the US dollar portfolio. So what does happen? People will continue to buy the US dollar, and this will lead to rise on this asset. But if the Fed reduce interest rate, what does it mean? It means that the dollar is no longer attractive anymore, and people will start dumping the dollar to buy the safe haven assets such as the gold. So this is the simple dynamic. So if you can understand this basic, then you can easily navigate the market in preparation for whatever the interest rate decision will come up with. So I hope I made myself very clear on that one side. I don't know if you have any question more to clarify on that. I just hope I made myself very clear on that one. And if I didn't, please let me know. I will try to clarify more, or tell me which aspect you really don't understand, so I will clarify better. Then you also said here that please also give some informative videos for candles and pattern behavior. It will helpful for all of us. Yes. I've been working on some things behind the scenes. In fact, due to the limited time I usually have, it is yet to be published. In fact, I'm trying to run a website where I can drop all these things. But trust me, I'm actually doing something, and I'm trying to get more hands to help me to compile these things together. But I will definitely do something about that. Thank you very much for that feedback. I really do appreciate that. Said, oh, you're welcome. I love you too, Said. Thank you very much for that compliment. And Maiden Heart says, what is the potential buys coming into the market? I'm not sure I get that correctly. What is the potential for buys coming into the... Oh, okay, what is the potential of buys coming into the market? I'm not sure I understand what you mean. But I think we talked about what market are you talking about? I guess you're talking about the XAUUSD, since this is what we just talked about. So if this is what you're just talking about, I mentioned earlier that the condition that will make me buy the XAUUSD today is for the $2,162 level to be broken to the upside, which interestingly shares a beautiful confluence with the resistant line of that uptrend continuation pattern we identified on the higher time frame. So if let's assume, which I doubt will happen today, let's assume that the Fed chairman suggests an interest rate cut, and then everyone start dumping the US dollar to buy the gold, then we may likely see a positive traction in favor of gold, leading to the breakout of this confluence to incite an uptrend move. So those are the parameters I said here today that we will be using to guide any uptrend scenario on this asset. So I hope I answered your question, Maiden Heart. Said, yes, I understand now. All right, thank you for the compliments. I'm very glad you found that useful. So I guess in the absence of no further questions, we have come to the end of today's Forex Morning Mastery session. And in fact, it has been a wonderful moment with you guys, as I really enjoyed every single moment, and I love the energy so far. And for those of you who have supported the project by clicking on the like button, thank you very, very much. And for those of you who are yet to, please do so. This is the cheapest way you can actually support this community to grow. So far today, we were able to attend to the 3 financial assets on our watch list for this week, which includes the USOILSPOT, the GBPUSD, and of course my favorite asset, the XAUUSD, popularly known as the gold spot. And on all of these assets today, we were able to identify simple trading setups that we will be using to strategically position ourselves for the next move. And I do hope you marked out those levels accordingly on your chart. If you had done so, well done to you. So all we just need to do right now is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hit your TP target. So in that regard, and with this understanding in mind, you do want to be having a well-defined risk management strategy in place to mitigate against any risk on your portfolio. And for those of you who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed here today. And if you did, you want to be part of our subsequent editions, as the more time you spend with us, the better you get to understand our analytical approach and eventually be able to use the information gathered here to enhance your own trading decisions. So I look forward to seeing more of you same time on Friday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing and of course prepare ourselves for the end of the week, which obviously it comes to be a promising one, as market participants are expected to be rounding off their trading activity for the week, which obviously brings some huge traction in the market, and obviously we do want to be on standby to capitalize on that move. So I look forward to seeing you on Friday morning as we come here again to review this current market structure. So it's on this note I would like to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.